That's certainly the response we've seen. So we've seen markets rally very hard today, and in particular markets across the world. So we saw everything sell off. It was very much a indiscriminate de-risking that we saw after the crisis with oil, and now we're seeing a fairly indiscriminate rally. So risk assets across the world have been boosted by what she said, but also because we've seen some stabilization of the credit markets too. Well, that's what we've been forecasting for quite a while. So we've been saying it would be sometime around June. It'll be the June meeting where they hike. I think it'll have to be a very careful and steady hike, perhaps not as fast as it's happened in the past, simply because we see so much asset volatility at the moment because of the very rapid fall in the price of oil. So I think unless markets have stabilized considerably by June, they're going to have to tread very carefully, given also the size of the balance sheet currently. Well, we're forecasting that it's going to go up to 75 next year, and then 80, and then 85 in the successive years. So a steady increase back up to maybe around that 80 to 90 band. So we are forecasting that it'll increase, simply because global demand is still quite strong. I think the price has fallen too much. If you look at demand globally, if you look at growth globally, it's still quite strong, still quite brisk. You look at global PMIs, you look at our global surprise index, all of those are showing that the price fell by more than you'd expect. So I think we'll gradually see it rise back up to higher prices, but maybe not to the $100 level that we saw just 3 or 4 months ago. Well, we think that's very unlikely because, as I say, there still is demand. There's still fairly brisk growth in the United States. The United States is still a net importer of oil. China is still growing, albeit more slowly. We're still forecasting 6.8% growth next year in China. So while growth remains brisk, I think there'll still be a demand for oil. We're not going to see it collapse, we don't think, from where we are now.